You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here at 1150 AM KKNW, the Saturday, April 2nd show. My goal is to keep you up to date on the latest news and trends in our local economy. Keep me tuned in, and I promise I will definitely keep you informed. If you're hearing my show at a different time or day, you are listening to a rebroadcast. You can call the show at 1-855-400-1150. Again, the show number is 1-855-400-1150 or online at themoneyhour.com. And in studio right now, first time having a conversation with Brook Anderson with Kaizen Financial Advisors. And I'm going to talk with him today. We're going to be discussing financial and retirement planning. Brook, thank you so much for joining me in studio.
Great. Thank you for having me.
And a little bit about Brook. Brook Anderson is a financial advisor with Kaizen Financial Advisors, a Bellevue-based independent advisory firm. Brook's finance career has spanned over 19 years. He was a CPA and MBA and registered financial advisor. His firm, Kaizen, provides holistic financial planning and investment management services for their clients. They strive to deeply understand the needs of their clients and help coach them through the major financial decisions they will make throughout their lives. They act as your personal CFO, and they are fiduciaries. And I like acting as a personal CFO, because isn't that true? I mean, somebody that is in charge of your financial future, and not only that, but the financial future of your family. So, Brook, again, thank you so much for joining me in studio.
Yeah, thanks for having me.
So if you could start out and tell my listeners a little bit about Kaizen and why you joined the firm.
Yeah, I recently joined Kaizen Financial Advisors because of my alignment with the firm's advising and investing philosophies, but even more because of how they treat their clients. Kaizen believes in providing white glove service, which goes beyond just the handling of administrative burdens, but goes to how we provide knowledge and insights in ways that our clients understand and feel respected regardless of their financial knowledge. We want our clients to have a fantastic experience working with us, and I just love that aspect of our firm. Plus, we're just nice people who truly enjoy getting to know our clients and giving them great service and great advice.
Well, you know, Brook, I only invite the nicest people in studio here, so I know you guys definitely meet that criteria. So from your conversations with people, what is the biggest concern people have regarding their financial lives?
Yeah. Far and above, the most common concern people have is whether or not they have saved enough for retirement, especially the retirement that they envision. Or on the flip side, they ask, how much do I need to save to fund the retirement I desire? These are complex questions, and unfortunately, my initial response rarely satisfies, which is, it depends. I'll tell you, there is never a specific answer to this question. However, with enough information, we're able to assess the probability a client will outlive their money. This is at the core of financial planning. The it depends part largely rests on responses regarding lifestyle, spending priorities, anticipated future events, resources, investment and withdrawal strategies, and a number of other variables. Without incorporating these elements, there's really no reliable retirement number, so to speak, that I would ever feel comfortable relying on. Having a plan that's built on a reliable model is truly the best way to go.
Totally agree, Brook. And so do you have some general advice that you can give my listeners about saving for their retirement?
Sure. A few things might seem obvious, but it's surprising how many don't fully take advantage of them. That's maximizing free money opportunities like 401k matching and profit sharing, maximizing the utilization of tax-exempt and tax-deferred savings vehicles like your Roth and traditional IRAs, and of course, starting early and saving aggressively. Another common question that I often get is, how should I prioritize my funding or funding my financial goals? Should retirement come first or something else? What about college savings? These are tough decisions, but in general, my advice would be that your retirement should take priority. If you must, you can finance a portion of an education. However, you can't finance your retirement. As a final thought, make sure that you accurately incorporate future out-of-pocket medical expenses. As you know, medical inflation has been a considerable challenge for people. Medical expenses can end up having a material impact on one's retirement. And unfortunately, it's not usually a good one. Through proper planning, we help guide our clients to build wealth faster, make better decisions that impact their financial future, and this certainly would apply to retirement planning as well.
So, Brooke, earlier you'd mentioned assessing the probability of running out of money, and I know that this is a big fear for a lot of people. So can you talk a little bit more about how that works?
Yeah, as I mentioned, it's essential to have a plan for your financial future. It's the only way to know if you're on track. Like the saying goes, if you don't know where you're going, any map will do.
And that's the truth.
Yeah, it sure is. In the short run, markets move in rather unpredictable ways. It'd be foolish to build a retirement plan on a single rate of return when we know with absolute certainty reality will never play out that way. In our practice, we model simulated market scenarios with our clients' portfolios. And from that data, we can assess the probability of one outliving their money. We can also stress test a retirement plan for adverse market conditions. This allows us to recommend course adjustments today that will improve your potential for success in the future. We also coach our clients along the way. We're a little like your trainer at the gym. We help you stay focused, stay on track, and keep you motivated to realize your goals. Whether it's in the gym or in your retirement plan, having someone in your corner really does increase your probability of success.
I love that. It's so important that we have coaches in every aspect of our life because that's what's going to keep us on track to not only do, with the advice of what we need to do, but keep us motivated in the direction. So I love that. What are some of the biggest mistakes that you see people make in regards to retirement planning, Brooke?
Yeah, first is starting late. Compounding is a powerful tool, but it requires time. People generally save too little, especially in the early years. Markets have trended towards lower yields and lower capital appreciation lately. And although general inflation has been low, we've experienced high inflation in areas such as healthcare and education. So in these market conditions, people really should be saving more aggressively than in past generations. As a general rule, I like to see people save at least 20% of their income. And for most, that tends to provide the resources necessary to fund a lifestyle that's comparable to the lifestyle you have today. Just for reference, the national savings rate is currently only 5.5%.
Oh my gosh.
I also see suboptimal portfolio design in relation to the stage of life, meaning too conservative in younger years and sometimes too risky in later years. You need to make sure that your assets are allocated to optimally achieve your goals at every stage throughout your life. Lastly, many people do not have a well-thought-out distribution strategy. How you take withdrawals from your retirement account is generally far more important and strategic than how you accumulated them in the first place. Some should consider a semi-variable distribution strategy, for example, where your annual withdrawals fluctuate somewhat with market conditions. Cumulatively, this can allow you to actually withdraw more money over your cumulative retirement years than you otherwise would have with a single set payment amount. Saving for retirement is a marathon, it's not a sprint. So have the discipline to stick with it. It requires some sacrifice, but the peace of mind that comes with executing a sound strategy is truly worth it.
Yeah, and you have to remember too, when you're retiring, hopefully you're going to be living quite a few more years. So if you're going to live another 30, 40 years, just ask yourself also, would you be working at the same job for 30 or 40 years if they never gave you a raise? So you've got to really consider what your money's doing, and it's going to continue to grow so that we can get through the rest of our years as everything else is going up. Now, you talked to me earlier about adding value holistically. What exactly does that mean, and why should that be important to my listeners?
Yeah, to us, holistic simply means considering outcomes in relation to everything else you're trying to accomplish and evaluating them accordingly. At Kaizen, we act as your personal CFO, as you mentioned. We're not here to simply invest and manage your assets. As your personal CFO, we look at every area of your financial life and provide you with guidance on all those major decisions you'll be facing. Not in isolation, but in the context of your collective goals. I often ask people, are you identifying and making optimal financial decisions at the right times throughout your life? If you aren't, consider the potential consequences. We focus on areas such as estate planning, retirement planning, college savings, major purchases like homes, tax planning, Social Security optimization, and any other area that has significant impact on your financial life. We find that clients generally receive the greatest value from our financial coaching and our holistic approach. So let me ask you, do you feel that you would make better decisions if you had an unbiased financial coach working in your corner? Our clients certainly do.
I certainly agree with that as well. So obviously managing client portfolios is a big part of what you do. Now, when it comes to portfolio management, do you have some general advice that could benefit my listeners?
Sure. Several thoughts come to mind. First is risk. Everyone's a long-term investor until the market crashes and their emotions take over. So I suggest you deeply understand your own personal risk tolerance as well as your capacity to take on risk. You should be very aware of how much your portfolio could potentially drop in a down market and be willing to accept that without making knee-jerk sell reactions. If you can't do that, you're probably in the wrong mix of assets. And there's nothing more damaging to wealth creation than ill-timed liquidations. You may have heard the statistic, but a stock investor who misses the 10 best days over the last 20 years realizes a return that's been nearly cut in half. You really don't want panic selling to cause you to miss those critical up days in the market. So make sure your portfolio is properly diversified across worthy asset classes that align with your specific goals. This should include both international and domestic securities, and this will improve your risk-adjusted returns that you'll realize within that portfolio. Third, minimize your fees. So minimize your fees through efficiently operated funds that also charge low expense ratios. And you want to manage your assets across your accounts collectively and maximize tax efficiencies. And lastly, periodically rebalance your portfolio to maintain your desired risk levels and take advantage of tax loss harvesting opportunities in that process. At Kaizen, we employ all of these practices in our investment advisory services.
Brook, a lot of people are really nervous about the recent ups and downs in the market and how they should protect themselves from major downturn or a true bear market. So what would you say to that?
Yeah. Well, first of all, I will tell you that no one knows or can predict with any certainty the occurrence of the next bear market or when it does occur, when you should get back in. In fact, I'd be leery of anyone that claims that they do know. Your best defense is to have a properly diversified portfolio. And this means a mix of assets whose movements are not perfectly correlated with each other. And that covers that cover a wide range of economic sectors and geographies. In a lot of cases, I would also recommend augmenting diversification with a bucket strategy. You sort of have one bucket that's your safety bucket, where a retiree might have several years of income for near-term needs, and a different bucket that provides for your long-term growth and inflation protection. And obviously, if retirement's a long way out, that safety bucket is less relevant, but it obviously becomes more relevant as you approach retirement years. And when it comes to funding your safety bucket, the timing can be tied to market conditions. There's no point in selling stocks from your growth bucket to fund your cash bucket in the depths of a bear market. Having the cash to ride through a bear market is the whole reason for having that bucket in the first place. So if properly designed, your allocation and diversification strategy should allow you to stomach the market's ups and downs without losing sleep at night. And as I stated earlier, if it doesn't, you probably own the wrong mix of assets. Lastly, I recommend not taking more risk than is necessary to achieve your desired goals. Because remember, peace of mind is worth something too.
Yeah, definitely. So after hearing some of the advice today, if a listener is interested in exploring the idea of an advisor, can you provide some practical advice on choosing an advisor, Brook?
Sure. Here's a few things you should consider. First of all, make sure your advisor is a fiduciary. A fiduciary is obligated to act in your best interest, even if it's to their own detriment. And if they're not a fiduciary, simply put, they do not have to act in your best interest. Secondly, understand specifically what services you want from an advisor, be it investment management or retirement planning, financial coaching, tax planning, all the things that we've discussed so far. Not every practice is going to offer every service or offer that service to the extent that you'd like. And third is trust. Do you align philosophically with your advisor? Get to know them. Do you personally trust them to make the best decisions on your behalf? And fourth, are they independent? And what I mean by that is, are they free from any pressure to push proprietary investment products? I'd be very leery of advisors that work for companies that manufacture investment products, as their advisors are often encouraged and incentivized to sell those products, and they may not be the best ones for your needs. Are they motivated in any way by transactional compensation schemes? I would strongly recommend you consider a fee-based advisor. This is where the advisor gets paid via a set schedule and not by getting you to move in and out of products, which can create a conflict of interest. Lastly, make sure that you personally feel comfortable with your advisor, as this should be a long-term and open relationship. you need to know that you are getting great advice, prompt service from someone you trust.
Brook, thank you so much. I've got just 5 seconds here, and here I've got to wrap up the show. But good client for Kaizen. What do they look like?
I would say that client is someone who's not focused purely on short-term results. We don't make short-term strategies to and jeopardize long-term returns as a result. So I would say it's somebody that values a long-term relationship with their advisor, and that values holistic planning, that considers their whole life in all the decisions that are being made.
Wonderful. Brook, thank you so much for joining me in studio. We'll definitely have to have you back. I appreciate your time.
Great. Thank you for having me. And
this is your host and mortgage expert, Tina Mitchell, signing off for the day. It has been an hour, but don't worry, I'll be here. Same time, same place next weekend, right here at 1150 AM KKNW. Enjoy the amazing rest of the weekend. Bye, guys.